Have you ever found yourself pondering the paradoxical notion that an economic downturn could harbor hidden opportunities for wealth creation? As we stand on the precipice of what could be a once-in-a-generation financial transformation, we ask, can we turn adversity into advantage? Today, join us on a journey through the unexplored territories of the upcoming economic landscape, where we'll unravel the secrets of potential transformation. Imagine an economic symphony, where the rising tide of unemployment, shrinking wages, and a dip in consumer confidence plays a haunting melody. As values across stocks, food, energy, and services waltz to a downward rhythm, layoffs become a dissonant background theme. In this economic ballet, caution and retrenchment take center stage. Now, envision standing at the edge of this economic precipice, armed not with fear, but with knowledge. Before we reveal the opportunities, let's delve deeper into the nuances of this impending economic saga. In the ballet of economic downturns, we witness not just a decline in numbers, but a narrative of interconnected events. Companies, in an attempt to weather the storm, cut costs, trim their workforce, and brace for slow or negative growth. A quick Google search reveals a slew of companies implementing mass layoffs, setting the stage for a predicted loss of 175,000 jobs per month in the United States alone, according to Bank of America. Now, let's explore the potential avenues of prosperity in this economic symphony. The stock market, a volatile ocean where fortunes rise and fall, beckons us with a promise of opportunity. Currently, major indexes are down, and whispers of a 20% further descent fill the air. Yet, history teaches us that the greatest bargains often emerge amidst market turmoil. Consider this. The average bear market drop since 1946 has been around 30%, reaching its nadir during the 2009 recession when the S&P 500 plunged 57%. Now tie this with the looming recession, and you have a potential recipe for unprecedented opportunities. The key lies in recognizing the signs of capitulation, the point where investors surrender, signaling the dawn of recovery. The stock market, like the ebb and flow of the tide, experiences downturns before the eventual upswing. Embracing this cycle can be a game changer. But hold on, the story doesn't end with stocks. Our journey doesn't stop with stocks, it continues into the realm of real estate. Every area has its unique story, and while some locations may thrive, national housing prices are predicted to decline by 7%, with vulnerable markets facing a potential 25% downturn. The echoes of opportunity resonate loudest where others see only challenges. For those eyeing investment or a new home, these declines may birth a buyer's market. Deals could emerge from the shadows, offering a chance to own a piece of the American dream at a discounted rate. In the midst of economic storms, an unexpected hero emerges: cash. Once considered a mere casualty to inflation, cash is now the phoenix rising from the ashes. Billionaire Ray Dalio himself acknowledges that cash is no longer trash. In fact, it was the best performing asset in 2018. Cash, now a beacon of safety, finds its place even among fund managers holding the highest cash reserves since 2001. As Citigroup suggests, cash becomes the recession hatch, an asset that withstands the tempest. Now that we've glimpsed the landscape, let's unveil the 5 secrets to thriving in this economic frontier. 1. Reframe your belief. A falling market as an ascending opportunity. Shift your mindset. While some see a falling market as a storm to weather, others perceive it as an opportunity to buy high-value assets at a discount. As Warren Buffett eloquently puts it, when prices drop, it's time to sing, not weep. Throughout history, markets have demonstrated resilience. The symbiotic relationship between downturns and eventual upswings forms the backbone of market dynamics. Understanding this relationship can empower investors to navigate the storm with confidence. 2. Embrace less competition, a field ripe for the ambitious. In the shadow of economic downturns, giants may stumble, creating space for smaller, more agile players. Studies show that companies continuing to advertise during tough times experience long-term positive growth. Less competition means a chance for the daring to seize the spotlight. History showcases the power of innovation during economic downturns. Companies that dare to invest and innovate during challenging times often emerge as industry leaders once the storm subsides. In the world of business, adversity can be the mother of invention. 3. The market's weeding process. Opportunity and adversity. A recession acts as nature's forest fire, clearing the path for new growth. Established companies like towering trees face challenges, while smaller entities find room to thrive. Wise investors understand this natural cycle, seeing opportunity where others see only adversity. An economic downturn serves as a Darwinian filter, allowing only the fittest businesses to survive and flourish. Savvy investors recognize the evolutionary nature of markets and position themselves to capitalize on the emergence of new market leaders. 4. The bull emerges from the bear. A historical perspective. History teaches us that every bear market is followed by a bull market. The S&P 500 historically recovers with a 40% average return the following year and a 58% increase within 2 years. Investing on the way down proves more profitable than waiting on the sidelines. The market, a resilient force, bounces back. While market downturns may induce short-term anxiety, understanding the historical resilience of markets provides a perspective that encourages long-term commitment. The cyclical nature of markets underscores the importance of patience and strategic thinking. 5. Act swiftly. The early bird catches the worm. Timing is everything. Recessions are rarely confirmed until months later, leaving a narrow window for those who act swiftly. Scaling back expenses, holding on to cash, protecting your career, investing long-term, and diversifying your portfolio are crucial moves to thrive during economic storms. In the world of finance, timing is a strategic advantage. Successful investors recognize the importance of acting swiftly and decisively during times of economic uncertainty. The ability to anticipate market movements and position oneself ahead of the curve is a hallmark of financial acumen. As we navigate this economic frontier, remember that difficulty births opportunity. It won't be easy, but for those who weather the storm, the rewards are boundless. So, scale back, hold on to cash, protect your career, invest for the long term, and diversify. The journey might be treacherous, but the destination is worth the pursuit.